During the week, rating agency Moody's released its outlook report on Nigerian banking sector, maintaining its stable outlook. According to Moody's, the outlook reflects the sector's resilient capital buffers and stable deposit bases, with high risks likely to subside as the economy is expected to strengthen. Well, Oji Udemezue, financial and management consultant and the CEO of Flame Academy and Consulting, joins me now to talk about this. Good morning. Thank you for making it here, irrespective of the chaotic traffic out there around you.
The pleasure is mine. Thanks for inviting me.
All right. How can you justify Moody's verdict in the midst of the challenges and troubles recently faced by the Nigerian banking sector?
Yeah, their verdict to me is quite commendable, and I think I will want to agree with them to a very large extent. Despite the fact that the Nigerian banking sector has had to, struggle in the past few years. The Nigerian economy went into a deep recession about 3 years ago. And once you have recession occur, economic activity slow down, and several sectors begin to crawl and suffer pains, it all ends up, in the balance sheet of banks, because many businesses at those times unable to meet their debt obligations. Banks are basically there to mediate or intermediate between the surplus sector of the economy and deficit sector. So you find that almost every sector of the economy, from oil and gas, manufacturing, services, agriculture, livestock, fast-moving, all sectors always, have one business or the other with the banks. So when activities are depressed, they struggle with meeting their obligations in the financial institutions. So in the past 3 years, we saw a number of ratios in banks dipping and giving a lot of worries. Then we had the capital adequacy ratio of banks go well below 10% against the internationally required. In fact, the central bank's requirement for 10% for local banks, 15% for international banks, and 16% for domestic systemically important banks. The average in the industry went as low as 7 to 8%. Consequent upon that, of course, meaning that a lot of banks were doing a lot of write-offs, charging bad assets against their capital, and capital, base of banks were being depleted. But thankfully, we're able to witness some growth, even though it's still a bit fragile and weak. But this economy has been growing, in the past 2 years now. And from what Moody's said, which I agree with, as long as the economy remains reasonably on the growth path, banks will continue to get better and better. So now the capital adequacy ratio of banks have crossed the 10% mark. I think it's somewhere around 15 to 16% average in the industry. But we still have a few banks that are quite outstanding in their capital adequacy position, at somewhere above 22, even up to 29% in the sector. Mind you, the Nigerian banks, are the pride of the African banking industry. You have quite a good number of Nigerian-owned banks, doing a lot of business in the West African region, East African region, and quite around Africa, and quite a few outside the African continent. So we cannot afford not to be stable, as Moody's has to do.
Now, considering, the slow growth in the economy that you did mention, where are the prospects, or what prospects are there for Nigerian banks?
This has been a major issue for the banking sector in Nigeria. The need for the banks to diversify their portfolio and de-risk or deleverage their balance sheets in some sectors. You find that Nigerian banks have had it very tough trying to create wide avenues, for credit issuing and for, good, because the bulk of banks' earnings in a normal commercial or retail bank, the bulk of their revenue comes from what you call the net interest margin. That's net return from funds. That's by giving loans, to those who need it, leveraging on funds provided by depositors. But if they amass all the quantity of, most banks have over 1 trillion naira in their balance sheet today as deposits. You find that these deposits must find their way, into the market as loans. But when the avenues for lending are not that much, like in Nigeria, you find most banks, hitting their head a lot in the oil and gas sector. And therefore, they go cyclical with that sector. Each time we have a bust in the global oil prices and all of that, you see banks struggling with a lot of bad debt. So the prospect for banks, for me, remains for them to innovatively and strategically look at other sectors of the economy, particularly the real sector, the non-oil sector, these small and medium enterprises, businesses, to see how to partner with them, without taking unnecessarily large risks. And that's why most times central bank comes up with a number of programs to lend to this sector, agricultural sector, and all of that. Banks tend to be a bit aloof
laid back, yeah,
towards those, because at the end of the day, credit risk still belongs to the lender. You find that the risk in those areas are still a bit large. But I think banks need to do a bit more, harder work. Banking should not be, how do I put it, bread and butter business. They must not wait for easy money. They must roll up their sleeves and get in there and look at some genuine entrepreneurial endeavors in this country and see where they can partner with them to create value. There are so many sectors that are growing in this country, even in the agricultural value chain. They may avoid the risky areas of maybe crop production because of the risk of drought and pests and all of that. Even in the livestock and animal husbandry, they tend to be afraid about diseases and all of that. But there are other parts of that value chain that they can, play in, processing, post-harvest technology, even aggregating, and then exporting, like the last speaker mentioned here. Nigeria needs to pay a lot of attention in ensuring that we produce things and not just export them raw, but even add some value to them. And these require capital. And banks are the major sources of capital for value creation in an economy, so that we can create employment and de-risk this economy, the issues of insecurity and all of that. People are hungry and things are not so wonderfully well. So the banking sector is key to an economy. And no economy jokes with that sector. That's why once you have any meltdown or disturbance in an economy, every government finds a way to support the banking sector, even though it also gives rise to what we call moral hazard. Because when the banks, when things are going so well, they are spending a lot of money in bonuses and all of that. But when things go bad, we use taxpayers' money to rescue them. But if you don't rescue them, the economy will remain on the floor.
Okay, now looking at the ongoing global uncertainties, now how do you think Nigerian banks should actually respond to these uncertainties? We have oil price volatility, the trade tension,
the U.S.-China trade tension that has not been resolved, and the market has been speculating on those issues. And the current issue now, the hot issue right now, is the Iran-U.S. standoff. A few days ago, we saw 2 oil tankers in the Strait of Hormuz. Somewhere the Persian Gulf, that we are, bombed, or attacked, and the U.S. alleged or accused Iran of being responsible, and they denied that. Even some of the owners of the tanks also said, well, we're not sure Iran did this. But just yesterday, Iran came with an open acknowledgement that they actually destroyed a U.S. drone. And then, of course, Trump, trust him, just tweeted that Iran had just made a big mistake. And markets read that to mean that U.S. must punish Iran for that action. So there's a lot of military grandstanding now around that area. And you see that the oil prices have just responded. These are the kind of things that make Nigeria a bit happy. When, supply of crude oil tends to be, constrained, the oil prices start jumping up. But so in the short to medium term, you will see oil prices remaining firm. But in the long run, towards the end of the year, people are even estimating that the price may go below 40%, because
of course Nigeria has no control over the price.
Yeah, we don't have. It's a major risk we have in this economy. So what I'm saying is that banks must begin to de-risk their balance sheet from oil and gas positions. They must be careful. And if you look at even the mortgage industry in the U.S., there are signs, a number of signs, that that market is also going to come up with some trouble in the nearest future. I read a report that says that asking prices of mortgage properties in the U.S. are beginning to come down. The number of properties being offered for sale versus what is on demand is also going up. So we are seeing a possible slowdown, or what we could call some crisis in that sector, and it always goes around most of the economies, particularly the emerging markets and developing economies. So Nigerian banks have to begin to be careful with their risk management, portfolio balancing, and portfolio risk management at this point. We can't afford to always go cyclical. Anytime we have economic meltdown, Nigeria will be so hard hit as we were in 2008. And even the effect of that crisis is still here right now. So my view is that while US and Iran are flexing muscles, US and China are flexing muscles on the tariff issues, and we have Brexit unconcluded, and a number of other global geopolitics and issues, Nigerian banks must sit back strategically to look at these events. When these things happen, bankers seem to be a bit aloof. And that's why we pay a lot of attention to make sure that banks understand how these global events and realities affect their businesses, so they can begin on time to estimate these events and take positions. Look at your balance sheet and see where your exposures are, and you need to ask yourself, if these things happen as they are really in the U.S. seem to be giving a lot of warnings, even though Trump is not so eager to carry arms and go to war. But the way things are going, he might want to show that U.S. is still the global, the world power. So, and if that gang up begins to happen, well, even though it may favor us in terms of oil price going up, but we know that because Nigeria we haven't been able to manage our oil and gas industry very well. The gains we seem to make when global crude oil prices go up, we also lose almost totally, because we have to go back to import these petroleum products at those high prices. So at net, we don't have any. We can just have some, free money for a while, but it hurts us through the subsidies, that we pay in bringing these things at very high price. Except this government, which I believe we are hoping, I'm actually very hopeful that this next 4 years, that the government of APC would be a bit more strategic in their approach to this economy, and I'm very positive, praying that they will sit back. We're all eagerly waiting for the new managers of the economy. We haven't seen the list, but we're hoping that this list will make some changes, putting the round peg in a round hole and a square peg in a square hole, so that managers of this economy Nigeria has a big potential. The financial sector is very strong and robust, despite a few banks coughing, in the past few months. But we have banks that are very solid in this, country, and many banks are taking steps to, improve their position. One of the oldest banks in Nigeria, who had a very high, risk, asset quality, with a very high non-performing loan ratio, have worked hard on that, and today we see that bank stabilizing, and things are getting better.
All right.
So I think we must have to. The banks must watch the economy and make sure that whatever trend that goes does not, impact the balance sheet negatively.
Yeah, you've talked a lot about risk and risk management. Now, considering the level of non-performing loans in the banking system, what lending opportunity are there in?
Non-performing loan is a reality in banks, and therefore credit risk is so critical. Of course, in banking you have 4 major risks that always rear their heads in business. Credit risk is so huge. Operational risk is a major issue, and of course liquidity risk and market risk. And banks must, and central banks around the world are also focusing a lot on risk-based supervision. So my position is that every bank in Nigeria must sit back and ensure that they have a robust and sound enterprise risk management system in place. When banks fail, if you look closely at them, I don't want to call them, but the banks that have coughed or have been annexed by other banks or have been taken over by central bank right from the global financial crisis period of 2008 up to today, if you look at them closely, it was just an issue of governance and risk mismanagement. Okay, that's the position. No matter how highly capitalized a bank is, it can go down overnight if it's poorly managed, if it's poorly governed, if risks are not properly understood, and if frameworks, policies, procedures are not put in place to ensure that these risks are properly understood and properly managed, properly measured, and that is key in banking, because banks are over-leveraged by nature of their business. You have a capital base of, let's say, 100 billion, for example. By virtue of your license and business you're doing, you're able to amass almost 1 trillion of all that people's money, depositors' fund. And you can't afford to allow these funds to go away because it will hit the economy. But if many of us have our funds in the bank and they go back, so with 1 trillion, your own capital is 100 billion, you can afford to allow 10% of that deposit go bad in bad loan. If it does, your capital goes to zero and banks fail. So banks must be careful. They must watch their ratios. It's not just about looking at, return on assets, very huge. Most banks enjoy very big returns on assets, return on equity and all of that. Also look at your loan to deposit ratio. watch your non-performing loan ratio closely. And when loans begin to show signs of weakness, even before that, ensure you have a very strong risk management framework, credit policy guide to ensure that we don't abuse. Most banks abuse themselves. You find a situation where leaders of these banks, give loans arbitrarily. But thank God too that a few banks in this country also give good example in terms of risk management, in particular for credit risk. Anywhere you have bad credit risk management culture, the bank is just an accident waiting to occur. So I implore all banks, knowing that the global economy is very weak, even though a number of economies around the world enjoyed very reasonable growth in the first quarter of 2019, second quarter was not as robust. Even the growth we saw in the US was pushed by importers trying to rush to bring in items, pending when the trade off with items. So it's just front loading of imports. But really, US is struggling. And that's why the Fed in their meeting this week chose to stay action on interest adjustments. So the global environment is still very fragile. The emerging markets and developing economies like Nigeria and the rest of the world, need to be careful at this point. And anytime you have a banking crisis, it always ends up with economic crisis and vice versa.
All right. So if I may ask, how safe are Nigerian banks?
I want to say without any, how do I put it? Without any shame, the Nigerian banks are very safe. Very, very safe. But in that, I must mention that the central bank and the leaders of these banks must ensure that we are true to ourselves in the way we manage risks in our banks. The central bank needs to improve their capacity to be on the floor to manage these banks, to not only when the ratios have gone back, to ensure that we do proactive and evidence-based policy rollout and monitoring of these banks. The management of banks today are getting better and better. And, I expect that Nigerian banks will remember all the time that they are to be watched, that they are the pride of Africa, and they must not let God. Imagine, as a few licenses, licenses have been issued. We expect that in the next, few months, some new banks that have been licensed will come on board. So we are still going above 25 very soon. That's enough. But let me say it too, that we have more than 40-something%, about 40% of Nigerians who are unbanked. So Nigerian banks must also be realistic in looking at how to partner with the fintech companies, the telcos, to create value, particularly through mobile money, to make sure that more people are brought into the financial system. That's the drive for financial inclusion. We have a very poor record compared to Ghana, Kenya, and other African countries that should be looking up to us. That's a major issue we must address. How do we leverage fintech, financial technology? How do we leverage telecommunications infrastructure to create value in the financial system, such that more people who are right now outside the financial system should come in, to make our economy more robust than it should be and attract bigger investors into the sector.
Okay, Moody's in its report expects Nigeria's real GDP to expand 2.3% in 2019 and 2.8% in 2020, up from 1.9% last year. So what role do you think the banking sector would play in all of this?
Banks are critical in the growth of every economy. Don't forget, I said earlier, banks provide funding for every sector of the economy. They provide funding for building industries, for providing working capital, in every sector, agriculture, industrial activities, manufacturing. Banks are critical. So the health of banks are very important in helping finance these sectors. So banks cannot afford to let the economy down at this point. These growth projections, even though they look hopeful, but they are abysmally lower than what Nigeria should be doing. Nigeria has the capacity to do up to 10% growth, But the issue is that we are so over-leveraged at this point. We are struggling with revenue constraints. Nigeria's debt is growing at a pace much higher than its revenue is growing. How can a country like Nigeria be running a budget of 9 trillion or thereabouts, and we're not able to pull together, up to 4 to 5 trillion in revenue? And we have to struggle to borrow to do anything reasonable for our economy. So financing the economy is very important. Banks must partner with government to provide this financing.
All right. Thank you, Mr. Odemezwe. Oju Demezwe is a financial and management consultant. Well, we'll take another short break, and when we come back, we'll do an opening calls to the markets. To stay with us.